Hey everybody, this is Boogie's Revenge, and it's been a while, so I don't want to go super far in the rabbit hole today. I just want to show you guys some technique here, because it's been a while since I've been able to stream, and you guys probably hear it in my voice. I have dentures. See? So, long story for another set of videos, but pardon the affected speech for this one. So, I just want to walk through some screenshots that one of my favorite members, Get Wealthy, submitted for his homework. So let me just pull these up, and we'll get the screen pulled up over here, and we'll just dig into them really quick, just to show you guys a little more in depth about what the strategy is that I personally like to look for. So I'm just going to open these up one at a time really quick, and sorry, this is, I'm doing it on stream or on the recording, so it's going to take a little bit. I'm just clicking slow here. Sorry, I'm having a moment. So hopefully everyone is having a good week so far. It's just Monday. We do have a nasty hurricane rolling around in Texas, so if you're down there, please be safe. Alright, so hopefully you guys can see these. I'm just going to make this full screen. So I want to walk you guys through exactly what the criteria was intended to be. And then I want to walk you guys through kind of how we can look for them in order. Now this isn't like do this or die. It's not a locked in stone strategy. It's just one that I personally use, and I want to just get you guys used to being able to follow a strategy. Okay, so first thing we're going to do is we're just going to look at daily chart. We're not going to go with the subcharts. I kind of covered this in the last video. Don't want to deal with extend hours or lower time frames. We just want that pure authentic volume to price behavior. Okay, we don't want to trade stuff at like 7 o'clock at night when there's only 2 shares trading. It's not going to give us reliable results, and it's not going to give us reliable fills even, because low liquidity leaves a wider bid-ask spread, blah blah blah. You guys all get it. So one of the first things we're going to do is we're going to add the 20 period simple moving average, and that's just to show us where the price is over a look back period on average. So is it going up? Is it going down? Is the current price higher or lower than it was, over the last 20 candles? We're just using it as a filter, basically. So we're just looking to avoid anything that's below that, right? Anything that's below average, we don't want to trade if we want the price to be going up. So we're just looking for trades above the 20 period moving average, and that just tells us that the price is accelerating to the upside. It's higher than it was on average. Doesn't have to be anything super crazy. 20 period moving average must also have a positive slope, and that just means that it's not a fluke. It's not just price popping over it and then jumping back down below it. Price is consistently moving up over the look back period. Okay, red candle at or just above the 20 period moving average. So we don't want it right on the moving average necessarily. We don't want it below the moving average. On is okay, below is not okay. We just want the price to kind of be at or above average, right? So same all these just kind of say the same thing. We just want the price to be moving up. Okay, that keeps us out of a lot of garbage. It keeps us from having to guess. All that good stuff. We just got a nice clean mechanical system. So for entries, okay, we're just going to look for the price to break over one of these red candles that's at or above the 20 period moving average when the 20 period moving average has a positive slope. And that's it. That's all we got to do for this particular strategy. So when the price breaks over the open of the previous small red candle, okay, then we look for entry. All right, and the open is the top of the body. It's not the wick. The wick is the high and the low. The body shows the open and close. All right, so now for, we've got the entry figured out. Now we're going to look to see what our risk is, because we always want to do that before we get into any trade. Is we want to make sure we get small, sensible risk. So if the wick is all the way down like 20%, and then the price just happens to break over that red candle, maybe we pass that one. Okay, so for this one, we're just going to take the lower of the 2 candles. Right, so the lower wicks out of both participating candles, the red one and the one that comes after it and takes it over. If there's maybe 3 or 4 candles in that color change, maybe you just use the lowest of the series. Okay, and that tells us what our risk is. Okay, so it's always going to be the open of that red candle down to the lowest point from the open of that candle until the price broke over that level. Okay, so again, if the risk is super high, we can always pass on that trade. That's our risk range, and then we're going to just double that and add it above our entry for our initial take profit. So we got 2 types of take profit. One is going to be a mechanical take profit that we're going to look for a predetermined level, and we're just going to lock profits at that level. The other one's going to be a little bit different, where we're letting the price breathe to the upside, and then it's telling us when to move our stop loss up. So it's always going to be either a limit sell order, in this case, or a stop loss that got hit above our entry. in most cases, okay? And then the secondary take profit is just the other version of the same process. It's always going to be a stop loss if it's above our manual take profit. So let's just go ahead and dig in. I'm not going to look at that one first. I want to look at this one. No, I lied. Let's go back to this one. All right, so if we look at this one, right, we got our 20-period moving average, and most of these candles have a positive slope. It's got a negative slope right here. It's got a slightly negative slope right here. It's kind of flat, maybe here. And that's just when the price kind of pulled down and it influenced that average. So none of these really have what we're looking for, right? The price on this candle doesn't quite break over this one. It does here if we consider this whole setup as a series, right? We'd have an entry here. We'd have our stop loss way down here though, because it's the lower of this series. So we maybe pass on that one, right? That's a huge risk right there. Now this one does happen to hit the 1 to 2 take profit, which is okay, but that's confirmation bias, right? Because our entry's here, stop loss way down here. That's a huge risk. We double that and add it up here. Maybe it didn't. I don't know. I'd have to measure it. Either way, it's super close, and I don't like this setup because that risk is so big, right? That's kind of counterproductive to what we want. We want nice tight risk. So what we could do instead is we could look at this candle, right? So this one right here, the price does break over this. Now it does gap up, so maybe this was maybe it was a pre-market gap. Maybe we missed it. We don't know, right? We can't beat ourselves up. We're just looking to study this stuff, okay? So in this case, this is a small red candle, and it's just above the moving average, and we do have price above it. So the entry, in theory, if we caught it, would have been here. The stop loss would have been here, and our take profit would have been somewhere around here for that initial 75%, okay? Now beyond that, we can use things like the 5-candle rule, a higher validated low, neither of which are on this chart, right? We don't get a validated anything because none of these are isolated. It just kind of falls back down. And we don't get a 5-candle rule because we don't have a sequence of higher lows on the candles. So just looking at this, this is the only kind of okay entry, but even then it was a pre-market gap or an extended hours gap, so we didn't catch that trade. So let's just close that one out. Let's take a look at this one as well. So in this case, we've got some period where the moving average has a positive slope. We got a little bit of negative. We got some more positive. We got a little bit of negative right here. Some more positive, more negative, more positive. So we're only really looking in areas where that moving average is moving to the upside. Okay, even if it's flat, it's okay, but I like it just having a positive slope. And in this case, all these candles are very far away from the moving average. So there's no trades to even be looked at here, right? It's already going. We know that the likelihood is it's going to pull back. So why would we try to catch the top, right? So in this case, we had a red candle, and then we had a red candle, and then the price didn't break over it until right here. Now it occurs below the moving average, so there's no entry here, right? So there's nothing in any of these candles except for maybe right here, right? We get another one of those gaps, but this risk range is pretty big, so maybe we could pass on that one too, right? So this one, it looks nice. It's got a nice, beautiful engulf right here. No trader would have really gotten into this and had a good time, so we're not going to let confirmation bias beat us, okay? So in this case, we could have just avoided the stop loss, right? On to the next. So right here, we've got a beautiful setup. Price is coming down, price goes back up. Moving average has a positive slope right here, so we're going to look for small red candles at or above the moving average, and in this case, we got one. Now the entry's here, and we have a low way down here, so maybe this risk was a little big. If we did take it, obviously it worked out, but again, you have to be careful about confirmation bias, especially when you're backtesting, because you could have had the low here, you could have entered, which is reasonable, right? That's a nice tight risk, but this wick might have formed after the fact, so we can't really guarantee this was a win, so maybe it's a little bit of a gray area. So in either scenario, the risk was pretty big here, so maybe we skipped on this one, and we didn't get any other opportunities here, except for maybe this guy, but again, that's just it's a sketchy area, and the moving average doesn't have a positive slope right here. So again, most of these rules are just here to tell us when not to trade. So if you're ever unsure or on the fence about a trade, you can always pass on it, right? So if we had a defined risk that was like 20 cents, okay, and we didn't see an open to low range that was within that 20-cent range, we can always just automatically pass on that trade. We don't care if it goes up 600% after we pass on it. Doesn't matter. It's irrelevant. That's hindsight bias. Don't do that to yourself. Just trade what's in front of you and trade it consistently. Okay? So right here, we had a good setup. It happened to have been rewarded, but the risk was a little bit elevated, so maybe we passed on that one. These are no-goes, right? These are below the moving average. We don't even need to look at these unless we're trying to catch the reversal, which you're not going to use a strategy like this for that successfully. So let's just pass on that. And still, you have a pretty sizable risk right here. So it's sketchy, plus the trend is going against you. And this just happened to have happened after the fact. It's not something that anybody could have reliably guessed and gotten right, 90 times out of 100. So don't try that. You just hurt yourself. So this one didn't really have any good setups. This is exactly what we're looking for. All right. So this right here, and while we're here, I actually want to pull out my drawing tool here, and I want to just kind of draw on this because this is kind of the peak of what we like to look for. All right. So ignore the box that he drew. He's got the right idea, but it's I think maybe he used a couple of different pieces of criteria here. So what specifically we like to look for is, you see this red candle? And this is obviously, right, let's just go through the rules. The moving average has a positive slope. Candle's small. It's near the moving average. And we have a nice tight risk. So the open of that red candle, the top of its body, is the entry threshold. So when this candle pops up here and breaks, that's when we look for an entry. And we've got the low of these two candles. And you can even just kind of use this one as a reference if this one's still forming, is right here. And that's the stop loss. All right, that's your risk range. Okay, that's going to be the max loss you ever take on this. On this trade, is just that range if you follow these rules, right? So then you take that range and you double it. Okay, so then we've got 1, 2, okay, of that, 2 of that risk range. Now it's a little bigger, obviously, because I suck at drawing and eyeballing things, but you get the idea, right? You take this and you double it and you add it there, and then that's when you lock in like 75% of the profit, just to make sure that you guarantee yourself a net profit, because what's going to happen is you got 25% left, okay? And that 25% is going to have to go 3 times as far down below this average than in order to give those profits back. So since you locked in those profits, that's it. You guaranteed net profit no matter what happens to that remainder, because your stop loss is here already. Okay, so there's no need for it to ever get down that far, because you would have stopped out by then. Okay. So then what we see on this specific trade is not only that take profit, that 1 to 2 take profit, is we have 1, 2, 3, 4, 5, right? We got a 5 candle series, 6, 7, 8, 9 candles. So right here, we're just following the low of each candle up until it's invalidated by the next candle. So when this candle closes, we move our stop loss up to here. When this candle closes, we move our stop loss up to here. And then as soon as this candle breaks below that, that's when we lock the rest of the position, or another 75% of it. Now there's 2 different ways to do this. This is just to show you the impulse, or the 5 candle series. I kind of explain that in other episodes, but I want to make sure everyone's clear on that. This is one of 3 take profits, or ways to exit a position, I should say. All right, so this one here is just to catch impulses, right? And if you zoom out, what you've done is you've taken this impulse, okay, and you've bought in right here, okay, and then you've exited right here, okay. And this right here is just opportunity cost. It's okay. You don't really care about trying to catch the absolute top. You could always lock in some on this big impulse if you saw it, but there's no need to get greedy. What we did is we locked in about 75% of that, or 60% of this impulse, just by following some rules, okay? So it doesn't have to be super complicated. I know a lot of people try to make it harder than it needs to be. You could just follow the lows up and then just lock another 75% right there. And in this one here, let me just do this as well. All right, so again, ignore his boxes, ignore his text and all that good stuff. I'm just going to show you what I see. Here we have a positive moving average throughout the duration of this chart. There's not a single area here where it's got a negative slope, which is good. So what we have here is we have a red candle near or above the moving average, right? That guy. Entry goes here, stop loss goes here, take profit is 2 times that distance, and we hit that right here, or maybe back here. Again, you got to draw it. It's probably over here somewhere. I think this is kind of shallow. But either way, easy lock in, 75%, guaranteed net profit. Right? You get the same kind of setup right here. This one would have stopped out. Okay, and then you get another one right here, 3rd chance. And this one obviously goes much higher. Okay, so 3 possible entries, maybe a 4th here if you're lucky. Or if you like the setup here, it's a little bit farther away, so maybe we can pass on that. But these 3 were good enough. Let me just erase all these. All right, so what we have here, let's just go with our original trade. Okay, we've got our entry, our stop loss, and our 75% lock profit. Okay, so what we have here is we've got this candle. Okay, this one that's in this purple box. 2 candles to the left, 2 candles to the right. They're isolated. The lows of these candles are higher than this candle's low, which is right here, which means this is a higher validated low. Okay, so at this point, this stop loss down here gets moved up. Okay, so this becomes the new stop loss for the entire position. All right, every time I get a higher validated low, I move the entire stop loss up. I don't care if it's below my break even. I don't care if it's right at my break even. The fact is I don't want the price to ever go down below that level. Okay, and then we got another one kind of right here. I don't really know. I'd have to look at the specific candles, but it looks like we got another one right here. Okay, so price goes up, 2 candles to the left, 2 candles to the right. This becomes the new stop loss. All right, so that's above your entry. At that point, you're guaranteed net profit no matter what. All right. However, we got not that one. 1, 2, 3, 4, 5 candles right here. As soon as this 5th one closes, 75% lock profit goes right here as a stop loss, and at that point you would have locked in 75% of the profit. Okay. You would have also done it here for this. Okay. And then you get another instance right here where you've got 1 candle, 2 candle, 3 candle, 4 candle. So 2 candles to the left, 2 candles to the right. This becomes the new stop loss. So you move it up for the remainder of the entire position, at which point you would have stopped right here for that final profit. So what you did on this trade is you entered down here, okay, and you had a stop loss right there, and you would have locked some profits here. You would have locked some profits on, let's say, around here, and then your final stop loss would have been right here. So that was your trade right there. Okay, so lots of profit. You can see how disproportionate it is to that risk reward, and this just moves up, up, up every time you get a higher validated low, and then as soon as that's invalidated, you stop out, or I stop out. I can't tell you what to do. You live your own life. But that makes sense. And then this one right here is another beautiful chart. Same exact concept. I'm not changing this. I'm not cherry picking profits here. I'm showing you guys exactly what I personally do. So in this case, this is not valid, right? This candle is touching the moving average, which is great, but the moving average is sideways. There's no positive slope here, so there's no need for us to look for an entry on this trade. This one here is. This candle right here has a color change right here. So this is the kind of trigger candle. This is where we look, and this is the candle that actually breaks over it. So this would be the entry candle. And this series right here has a low of right here. So maybe that risk is okay. Maybe it's too small, or maybe it's too large for you. I'm sorry. Either way, that's an easy entry. 1 to 2 take profit. You would have knocked some profit right there. But let's say you set a little tighter, right? Let's say you use this one and this one, right? You would have stopped out. That's okay. Super tiny risk. You guys see it doesn't really matter. And then you got another entry right here, which it looks like this is the one he marked, which is amazing because I'm glad when we all do stuff the same way. So he's correct in saying this might be an early entry, but this is a tiny red candle. It's above our moving average. Moving average has a slight positive slope here. Candles near there. We get a color change, tight risk, successful entry, right? It's green light go at that point. So then we count the candles and we look for higher validated lows, and that's all we have to do, right? So 1, 2, 3, 4, 5 candles right here. As soon as this 5th candle closes, whoops, that is where we lock 75% of the profit. We also lock some right here. Again, don't forget this part because this is like the most consistent bread and butter right here. It's just getting those 1 to 2 take profits. Then when you get a 5 candle rule, you can lock 75% more. And then right here, we've got another higher validated low because 1, 2, 3, 4. So 2 candles to the left, 2 candles to the right. They are higher than this low right here, which means the stop loss that was originally down here goes up there. Okay, so that's for the full position, not locking 75%, not taking pieces. This goes for the whole position. Okay, and then we get another 1, 2, 3, 4, 5 candles in a row. As soon as that one closes, you move your take profit up here for a partial stop loss, which locks in 75% of the position right there. And then what you've got here is another take profit. All right, and this isn't a validated higher low because this candle is higher, this one is not. So this isn't an isolated low because you don't have 2 candles on both sides. Okay, however, this guy right here is a higher validated low. 2 candles to the left, 2 candles to the right are higher than this guy, therefore this becomes the full stop loss. And then after that I can't see what happens because the screenshot cut off. So we've got 2 impulses, 2 5 candle rules, 2 higher validated lows, and 3 super tight entry risks. Only one of them was invalidated, so 2 that are solid. All right, and then this one here is, as he said, it's a weird one. So therefore, what we can do is just not trade it, right? If we're not confident in it, we don't have to trade it. So in this case, we do have a positive slope right here on the moving average. That's great. We got kind of a tight risk here. It's a little big, but it's, you know, kind of okay. We get a color break right here, and then that would have just been a quick scalp, honestly, and then you would have stopped out on the rest of the position. There's really not anything here that we can really use. Like this one might be question mark. You can always try it, right? But if the moving average is kind of meh, like when this, okay, so when this chart was building, that's what you would have seen. So maybe you did see an opportunity in it, but there's just a lot of chop and a lot of wicks. Maybe we don't like this one. Either way, you know, we'll test it out. So in this case, maybe it hit target, maybe it didn't, maybe it stopped out. I don't see any good value there. But it's okay to test it either way. I'm not going to let confirmation bias get in the way here. I just personally don't trade stuff when I see a bunch of wicks. And then right here, we do have a nice clean risk. Okay, so if we're going to trade anything, it might as well be this, right? So in this case, we may or may not have locked that 2 times target. But either way, the risk here is really what sets this trade apart. It's not how high it goes or whether it hits stop loss. It's how small we make that risk. Okay, so in this case, this would have been the only decent entry in my opinion, till we get to here, at which point you would have had another tiny stop out, maybe, if you didn't lock some of that profit, but that would have been your opportunity, and that's where you need that predetermined 1-to-2 ratio. So maybe 2 successful entries, maybe 2 that you pass on because there's wicks, maybe you just don't touch any of this because there's wicks. I just don't like the chart. And then, all right, let's take a look at the last one. And again, just ignore his drawings. I just want to show you what the candles themselves are showing me. So this one is an entry, right? Positive slope on the moving average, red candles above it. We get a color change, and it's a tiny risk. All right, so there's your 1-to-2 take profit, 75% right there. And then 1, 2, 3, and then we get an invalidated. So we don't get a 5 candle rule here, and we don't quite get 2 candles to the left, 2 candles to the right, because this guy is not lower than this guy, or I'm sorry, not higher than this guy. So this is not a higher validated low. All right, so then we get this guy right here. Now this, 2 candles to the left, 2 candles to the right, this is a higher validated low. So your stop loss moves from here up to there, just above your break even. Okay, so again, your just built-in rules protect yourself, and you're just following those. Okay, so this is now the stop loss. We then get another one here, right? 2 candles to the left, 2 candles to the right. This becomes the higher low. This is where we put our 100% stop loss. All right, so it's not a whole lot, but it's still just kind of inching up there. And then we get a 1, 2, 3, 4, 5, right? So as soon as this candle closes, that lock profit, 75% stop loss, goes right here. And then we get another candle with a higher low, and it goes up. And then as soon as this candle right here breaks below that, you've locked another 75% of your profit. So you've locked 75% here, 75% of what was left here, and you're still in the position at this point until you run out of higher validated lows or they get breached. Okay. And then I think we got one more here. Maybe 2, I don't know. Hopefully this makes sense, right? So this is a no-go, right? It's below the moving average. Moving average does have a nice, beautiful upward slope, which is great. But this right here is what I'm interested in. You guys see how tiny this risk is? And this one here as well. Okay? So this one, stop loss goes there. You get a 1-to-2 take profit. You hit your target. And in this case, you didn't have a 5 candle rule, or maybe you did. Let's see, 1, 2, 3, 4, 5. Yeah, so you would have had a 5 candle rule there. So you lock some profit here, lock some profit there, and then you would have stopped out on the remainder of it right here. Okay? Then you're below the moving average. There's no point in trying to trade. But we get another entry right here. Okay? Beautiful risk, nice and tiny. 1-to-2 take profit for 75% of the position. And so you would have locked some profit right there. The beautiful part about this is you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 candles in a row with higher lows. This thing went parabolic. That becomes your stop loss for your other take profit, your 75%. And as soon as that's breached, you lock in that second 75%. So you locked in 75% of the position here, and you locked in 75% of what was left there. And then you can check to see if you get this as a validated higher low to move the stop loss all the way up. Now, if this candle over here isn't, right? If this other candle goes over here, that's not a higher validated low. If it's up here and the wick doesn't come down below this guy right here, that's a higher validated low, and you move that stop loss up. Easy peasy. Okay? And that's it. Here's just a set of the rules, and I know this is like a 25-minute video, and it's, I haven't been very present lately because I'm getting all this dental stuff done. But I want to make sure you guys are very clear on what you're doing. And again, it doesn't have to be this specific strategy, but you guys can now see the value in that strategy. And really the only value is that it filters out stuff that's going against you, and it keeps the risk nice and tight, and ultimately that's what matters. Okay? So let me end this recording here. Hopefully you guys are in the Discord. If you're not, there should be links in the description of this video if you're on YouTube. And I look forward to seeing you guys next time. So I'm going to also change the strategy up a little bit. So I'm going to kind of put out a series of these homework assignments. And then I'd like to review the team members as they do them, so we can kind of see what does and doesn't work, or just kind of get familiar with the process of backtesting and stuff like that. So I use this one almost all the time. It's very, very easy to do. But I do know there was some confusion on specifically when to enter and how to take profit at certain areas. So I hope this video helps. I know it's about a half hour and it's a lot to digest, but I just wanted to make sure that I gave you guys something because I've been so preoccupied with not being able to speak. So thank you all for watching. Have a good day, and I will make another one as soon as I can. Thank you. Goodbye.